Hello again, this is Alex with MasterChartsTrading.com, and today is Saturday, April 21st, and this is a market recap for April 20th, 2018. So far, the World War III has been put on a back burner as Syrian quagmire deepens, but at the very least, there is no direct confrontation between Russia and the United States. As far as stocks are concerned, S&P 500 futures are retesting support, and I'll show you what I mean by that. Apple drops over 5% for the week. I think we may see still some back and forth before the current correction may be over finally. So overall, stock market is still bullish. Investment grade bonds and bonds of all kinds dropped for the week. Dollar gained versus most currencies. And this is translating into weakness for gold, and we'll look at it in a little bit more details today. Again, we'll look at natural gas, oil, energy ETF, and look at cryptocurrencies at the end. Okay, so let's look at S&P 500. This is S&P 500 futures on daily time frame. So number one, we had a gas attack in Syria last week. United States responded with or rather, United States and the allies responded with several airstrikes and several strikes in the Syria. Russia was expected to respond in some way, but no response really came from Russia, which was a hopeful sign that at the very least World War III is not about to begin. Overall, the stock market is still in a bull phase. Here we're looking at the futures again. You can see this line here. You can see the green line, the blue line, the red line, and the yellow line. These lines here are part of my indicators, which you can find out more about them at MasterChartsTrading.com. So what I'm seeing here is this support, and currently the support is 2678.25, but I think a stronger support is a little bit lower at 2670. So that is, kind of like a good support, because you can see that before it was supported here on the 22nd of March, it was broken with a close below it, and then we had several attempts to rally above it. Finally, we succeeded on the 16th of April of this year, and now the price came up and then pushed back down. So what I'm seeing here is the support is being tested probably at 2670, I'm guessing. It's a pretty decent support here. So if the support holds here, then we could probably see fresh highs, or at the very least rally towards this green line. Support doesn't hold, then you can see several scenarios. For example, sideways trading, no real trend, or a push lower towards this red line, and then possibly eventually to this yellow line. We don't know the future again, so we only are betting on probabilities. And in this case, probability of an upside, I think, is still significantly higher than probability of more downside. I meant significant downside. I think that we could easily break higher and continue to fresh highs. As far as foreign markets, and here's Russia, RSX, Russian ETF, you can see a big, enormous gap here on the 9th of April. This is now basically, we have resistance here at $22. You can see the price collapsed below this red line, but was able to rally above it and partially close this gap down that occurred on the 9th of April of 2018. Again, we don't know how the situation will unfold. For now, this particular chart, I still think it's mildly bullish. So again, I would be, if I was trading it, I would be buying it. I still would not short it. when would I short this particular chart? If or when we get a close below this particular this yellow line, which is again part of the my indicators that you can get on your charts as well, then we'll bounce and maybe we'll continue lower. So that's when I would be considering shorting it. But for now, I don't think it's there yet. So probably a bullish setup, if anything. All right, QQQ, Nasdaq 100 ETF. Really, I think it's a very strong chart. This is a fresh highs on the 13th of March 2018 here. Normal looking pullback. These up arrows are basically alerts that I send to my subscribers. And, you know, depending on where your target is, my targets are relatively tight. You could have probably already made money with this particular alerts. The trading range is narrowing. Notice that you can see this line's curve up. So if or when the price pushes lower, it won't have to. It will be easier for the price to come down and break the support levels if or when this happens. For now, again, I'm looking at this chart as a bullish chart, and I would likely be sending alerts to keep buying it, basically. Look at Apple. Now Apple was under severe pressure. This is about 5% drop in a week, especially on Friday here. Very, weak close. A lot of selling, so a gap and another. So we have actually on the 18th and then on the 19th of this month we have a gap, continuation lower. Notice where the price closed. Price closed near the low of the day. Next day we had another gap down, and again the price closed near the low of the day. So this is significant selling, very little buying pressure, mostly selling pressure. What's going to happen on Monday, nobody knows. Again, for now I'm looking at this chart as a bullish chart, so I'll be looking to buy it. And you can see previous alerts. Here's one on the 6th of February. That one resulted in a 12, almost 13, a little bit over 13% actually, or 14% gain. Got several alerts here that were also successful. So overall, Apple under pressure, but I think still is bullish in the long term. Apple is an enormous company and a huge part of the S&P 500, so we should definitely pay attention to it. Small caps, IWM. I think it's a bullish chart again. So we had fresh highs back on the in January 2018. Attempted to get to fresh highs, pull back. Now we're looking at another attempt. But overall, again, I'm looking at this chart as a bullish chart, and you can see that great opportunities occur, especially around the blue line, for a move higher. You can see several possibilities here, several alerts. Let's continue. I wanted to show some of the market breadth charts that I look at. Here is S&P 500. Why do I think it's a bullish chart? Multiple reasons. Again, these are fresh highs. Advanced decline lines continue to hit fresh highs. Notice that advanced decline line just hit an all-time high. This is a bullish divergence. Why? Because when advanced decline hits fresh high and the index itself has not yet hit a fresh high, that means that there is a bullish divergence between the underlying market breadth. So in other words, how many stocks are pushing higher versus how many stocks are pushing lower. And in this case, stocks that are pushing higher significantly outnumbers the number of stocks that are pushing lower. So advanced decline volume line is lagging slightly, but again, I wouldn't read into it too much. And notice here, a couple of weeks ago I pointed out that bullish percent index, percentage of stocks above, bullish percent index on S&P 500 was deeply oversold at 35%. We got a little bit of a rally, so we'll see if that rally lasts. Here's QQQ again. QQQ advanced decline line did not hit fresh high. Notice that we're still lagging, and neither did the advanced decline volume line. So overall, still not 100% where this is going. QQQ is a big part of S&P, but it's not, the ultimate, so to speak. On IWM, on the Russell 2000, notice the advanced decline line at fresh highs, and this is obviously a bullish divergence as well. So overall, a bullish chart on IWM, and we are still looking to keep buying this chart. Here's a New York Stock Exchange Composite on a daily time frame. Again, pointed out this relatively oversold conditions here in the late March, beginning of April. So generally speaking, again a bullish chart. Here are the advanced decline lines right there, fresh high on just this week really. Advanced decline volume slightly lagging. So again, overall I still think that the picture is bullish, and we should be looking to keep buying this chart. Now overall the stock market is bullish, but there are obviously pockets of weakness, and here's one such pocket, and this is XLP, also known as staples. The reason why it's selling off, I have no idea honestly, but this fund is heavy in certain stocks, for example Clorox, and I haven't traded Clorox, but I wanted to show my way of thinking, so to speak. So here's Clorox on a daily time frame with my indicators again. You can find out more about them at MasterCharts Trading, but here's what I wanted to see, that we had first we had a minor support break here on the 2nd of February. Then we had a major support break on the 5th of February, and from now on basically I was referring to this chart as a bearish chart. So in other words, I would not be looking to buy it, I would only be looking to sell it. So such opportunity did occur, for example here on the 29th of March. If you shorted it here, you can do it via buying put options, for example, or you can just outright short it if you have a margin account. And notice that we had pretty much a nice collapse here in the prices. So right now those are fresh lows. So again, bearish chart. Fresh lows are always bearish, and our thinking should be that we are selling, we're not buying. So on this chart, what I would be looking for, I would be looking for a rebound currently to around 120, or better yet to 127. At which point we could look for a shorting opportunity, for example, via buying put options. So the reason, again, why XLP, the consumer staples, are selling is difficult to say, but you know, we have to work with what we have. Here's XLU, another pocket of weakness. Notice that we had a nice possible rejection here. I put this arrow here a while back, so if you did for example limit sell, or you know, looking for to buy put option to, let's say, $51, we could easily move down to 49 or possibly even fresh lows. This is a bearish chart, so again I would not be looking to buy this chart just yet, but it could change in the future. Another proxy for bonds, and I'll explain what I mean later on. Here's PGX. You can also look at PFF, which is a preferred portfolio fund. Overall, here's another arrow I put there a few weeks ago. Overall, a bearish chart, and again I would be shorting it. The reason why it's bearish is because of this breakdown here. So overall, short on any rebound basically. So you see, and then also real estate is another pocket of weakness. Same thing, you can see a bearish break here as early as 12th of January of 2018 of this year, and then we just look for shorting opportunities. Rebound, short, rebound, short, rebound, short, another rebound, another short. So here's another opportunity. Notice, you can see how nicely sometimes it happens. It just kind of or the tops right around the indicator lines. So So again, look for those indicator lines at MasterChartsTrading.com, and if you don't know how to use them, please ask me. Okay, so again, overall, several pockets of weakness, but overall, the stock market is in a bull market still. So let me look what I else wanted to say. All right, let's briefly look at the bonds. So first of all, let's look at long-dated treasuries. Here's a 20+ year treasury bond fund, TLT. Again, with my indicators here, MasterChartsTrading.com indicators, you can look for them on TradingView.com or on my site. So again, bearish chart, I think, as early as possibly 1st of February 2018, but definitely as early as 8th of February 2018, this particular security is in a bear market. In other words, once again, I would be only looking to short it, sell it, use put option to short it. I would not be looking to yet buy it. I would be looking to buy it if or when we close above currently 124, so 125, 124. Here you can see that this particular fund wants to kind of go lower. On Friday had a big gap here down. So overall, this feels like it wants to continue lower. The general bond market, AGG, is just hit fresh lows. So once again, I have no bonds in my portfolios, and I'm, alerting my subscribers to avoid bonds. So if you are a subscriber, hopefully you followed my ideas. Here's LQD and investment grade corporates, and notice again fresh lows. So once again, how do I think about trading? First, I need to pick a direction, and in this case, the direction is down because we had a bearish break here on the 21st of February, right there, where I'm hovering. So here we can look for selling opportunities. And so junk bonds. Let's look at junk bonds briefly. So here's junk bonds. Something was definitely brewing even earlier, probably as early as December of last year. I was not liking this action. The trading range was very narrow. Notice how narrow this range is. I didn't know which way the break would go, but eventually the break came to the downside. And notice I have an avoid label here. This is what I'm telling my subscribers to basically avoid it. Dead cat bounce here into the February. Fresh, push lower, another bounce. This looks like a dead cat bounce. I actually I bought put options here at 36.50. I bought them. Let me see where I bought. I think I bought them on the 18th of this month. So far, it's a winning trade, and this is going in my direction, obviously. Overall, not a great chart, and junk bonds again, generally speaking, correlate highly. Let me just show you what I mean. Correlation wise, here's junk bonds together with S&P 500 on the same chart. And you can see that they really move in lockstep with one another. So for all practical purposes, you can think of junk bonds as another sector of United States market. So again, notice the correlations are high. So here what I'm wondering about is perhaps the junk bonds are sending some sort of a message to the stock market, and possibly the stocks will eventually roll over. Is it going to happen now, today, tomorrow, or in a year to come? Again, we don't know. Future is unknowable. Future is penciled in. You have to think about the possibilities of the future. and there are multiple future possibilities. Alright, let me see what else I want to cover about the stocks. Okay, so that's it for the stocks. We'll continue to the dollar now. Alright, let's continue to the Forex universe. These 4 lines on the chart, again, you can find out more about them at MasterCharts Trading. The way I use them is basically as a support resistance lines. So, for example, currently the dollar index is in a downtrend. The reason being is because as far back as May of 2017, but definitely as far back as June of 2017, where this particular security became bearish, and now I was thinking about only selling it. So we can fast forward and look for basically selling opportunities. Selling opportunities come really nicely at the yellow line, but even better at the red line. Sometimes the security doesn't even get there. So overall, dollar has been really weak, hitting fresh lows up until very recently. I feel like maybe we're finally coming to some sort of a turnaround. So let's examine some of the other components of the dollar. Here's euro versus US dollar. Currently at the green line, so before, notice that we had a nice opportunity right there to buy. The way it's looking, honestly, I want to kind of wait a little bit and see which way it's going to go. Let me look at British pound. Same thing, you can see a pullback towards the green line. Again, I'm not 100% where this is going, so I'm going to hold off on my decisions. US dollar versus Japanese yen. Here US dollar is again gaining versus Japanese yen. I wonder if it's going to be a good time to short. Notice that here are nice opportunities to short here. US dollar versus Canadian dollar here. I had actually opened a long here, but I got stopped out very quickly. So very tight stop here. But notice that again now we're rallying. So again, I'll be waiting and watching this one. Some of the commodity heavy currencies, here's Australian dollar versus US dollar, lost ground, and now it's really approaching the shorting levels here for Australian dollar. New Zealand dollar also kind of sold off really hard, and we'll see where this goes. US dollar versus Mexican peso, relatively tight trading range and pretty big rally. But you know, if we close above, like, say $19 here, I think the US dollar will start winning this battle. So overall, I am possibly, you know, it's possible that the dollar is bottoming. You can see we hit fresh low here on the 16th of February, but so far we did not get any fresh low. So I'm expecting a rally possibly to like 92, which by extension would mean that euro will most likely come under relative strong selling and most likely will continue to about $1.19. None of this is written in stone, so again, bet accordingly. Alright, so we just covered the dollar, and now let's continue to gold. So here's gold. Excuse me. XAU USD. So if you trade Forex, then you know how it works. The XAU is gold above over US dollar below. So if the gold strengthens, then price goes up. If dollar strengthens, price goes down. So pretty straightforward. Like I said, the dollar possibly may rally. I'm looking at DXY here. Now, before you could see we have arrows here. So I'm gonna put another arrow. Just I mean, I personally would not short it right now. I'm not sure. Like I said, this security could potentially rally, but here at around 92 could be an interesting shorting opportunity. DXY is not available to trade in the United States, or you can do it in this is a CFD. But in any case, let's continue to gold. Here's XOU USD. This is a bullish chart, and as I keep repeating, I am concerned about gold miners more than I'm concerned about gold. Gold right now is in a bull market. What worries me is the gold miners. So here are the gold miners, GDX. I was worried about breakdown below the support line as far back as February of 2018 here. Then we definitely broke below this yellow support line on the end of February here. So here I'm really concerned because, to me this is just purely bearish chart now. Now we have a rally. Now what bugs me is that I cannot unequivocally say that this is a bearish security or is this just an overreaction. So again, I'm looking at, for example, GLD here. GLD looks great. This is a bullish security. We could see a pullback to 124, but overall this looks bullish. But GDX is diverging, and you can see that it's pushing lower. So I'm trying to figure out if this rally should be shorted. But when I'm so unsure that I have to spend many minutes explaining this stuff, that means that I'm probably just going to avoid this particular security and just move on with my life. So gold miners are sort of confusing currently, and basically I'm avoiding it. What do you guys think? Make a comment below. And also, please like the video. I keep forgetting to say that. But do make a comment below. What do you think about gold and gold miners? Which one is correct? Gold miners or gold? Alright, let's continue to natural gas. This is NGAS. This is again CFD. But we can look at futures as well. Here's natural gas futures. Bearish security. Here's the bearish break in beginning of February. Basically, if you're aggressive trader, you can short at the yellow support line, or the resistance line in this case, because we're below it. So we're coming from below towards this resistance lines. Whatever was support before now became resistance. So what I'm seeing here, we have resistance at 2719. Me personally, I've been saying that as I get older, I am more conservative and I don't like this aggressive shorts. So I would be probably waiting for a pullback to around $3, and then afterwards we could like potentially buy puts potentially on UNG. That's an option. If you have an options trading account, but again, Robinhood now allows options, so it's a possibility. Okay, United States oil, fresh highs, so pretty unequivocally bullish chart, I would say. Here is light crude oil futures again. This was actual alert sent to my subscribers here at MasterCharts Trading. Nice gain here if you were trading futures. You know how leverage trades work. If it goes in your favor, you make a very nice gain. So you have to, again, be careful if it doesn't unwind against you. And I keep teaching this stuff at MasterCharts Trading. You need to really know where your stop is, and additionally you really need to exit when your stop is hit, and that is the psychology of trading, and there's a different subject altogether. So energy ETF XLE, I was a little concerned with this really big precipitous drop here, but notice that we did not close below this yellow line, and for me this would have been a bearish indication. And this is a stock fund, and for stock funds I favor you know, the bulls. I favor the bulls. So I was looking for a close below this yellow line. It did not occur. So notice I sent my subscribers caution, but not avoid. If there was caution, then I would say, or rather, if there was a close below the yellow line here, then I would say that's it, avoid it. Again, you can find these indicators at MasterChartsTrading.com. Overall, XLE energy looks bullish. XOM, one of the biggest component of energy ETF, I just don't like this chart right now. If the entire oil complex moves higher, and it does look like it wants to go higher, then XOM will obviously benefit. But it's exhibiting weakness within the, you know, energy sector. So here, for example, here's CVX, Chevron. It's a much stronger looking chart. Notice that we did not close below this yellow line, kind of bounced around here, and now we actually broke out above this support resistance line. So overall, you know, if I was trading, I would probably be trading Chevron and avoiding ExxonMobil. Finally, the subject of much debate and heated arguments, cryptocurrencies. Here's Bitcoin, BTC USD. I think it's bearish. I think it should be shorted. Again, it's a very expensive instrument, so you need to have quite a large account to trade it. So I would probably be looking, if I was trading it, to short it at around 93.21 here, so which is really close. And notice before we had a couple of nice breaks, and even this, for example, trade back on February 10, 2018 would have worked okay, because notice where our stop is. It's above this blue line. Again, you need to have a relatively large account to trade this particular security, and if you don't have that large account, you can do Litecoin. Here's Litecoin, LTC USD, basically the same thing. We have a bearish security because we have a support break, and then we need to short it. Well, we don't need to short it, but we could short it. So for example, here, this was actually this arrow was put live on the during the previous video. So notice that after this arrow was put on, we had a drop of about almost 30%, 27.9%. We're again coming up to support resistance lines at 159 and change. So I would expect something of a resistance to manifest itself here. ETH USD, Ethereum. Similar pattern. Notice that I am, you know, showing the same indicators. I'm using them myself all the time. And notice that we had a break here on the 14th of March 2018. So it says short now. Afterwards, we had a 40% drop. Notice where we bottomed exactly at this yellow support resistance line. So these lines actually are quite helpful. So again, we're coming up to around 657, and if I was trading it, I would consider shorting it here. And then here's Ripple. I'm not sure who trades it though, but here's Ripple, and probably very small volume. Again, bearish. If it bounces to $1.30, then I would definitely short it. Again, if you have been watching this video, please hit the like button. Then also head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on Alerts and Indicators and sign up for a free 30-day trial. Alright, that's it for this week's recap. If you have any questions, please send them in, and thanks for watching. Bye-bye.